Good morning, traders, and welcome to BCI's morning market analysis. First up, let's talk about the US dollar. The DXY eased on Thursday, hovering around 96 and giving back gains from the previous session. Pressure came after Treasury Secretary Scott Bessent said that the benefits of a strong dollar policy were short-lived, while dismissing speculation of US intervention against the yen. This contrasted with President Donald Trump's comments indicating comfort with a weaker dollar. Further downside pressure came from strong inflows into physical assets, with gold, silver, and copper hitting new highs, alongside elevated geopolitical trade and policy uncertainty in Washington. The Fed left rates unchanged as expected, with Chairman Powell suggesting central banks may be sidelined, noting solid economic growth, a stabilizing labor market, and inflation that remains slightly elevated. Technically, the dollar has broken below the 97 support from its 96.5 to 100 range, testing 96.58. Momentum remains weak, with the key support zone around 96 to 95.58 and resistance near 97.3 and 97.5, and the psychological level of 98. Next up, let's have a look at crude oil. WTI jumped over 3.5% to around 65.1, the highest intraday level since September. The move was driven by rising geopolitical risk after President Trump warned Iran of potential military action if a nuclear deal is not reached, raising concerns over Middle Eastern supply disruptions, which represent roughly 1/3 of the global oil supply. Despite oversupply expectations, oil has still remained supported by tensions involving Iran and Venezuela, along with supply disruptions in Kazakhstan. Technically, WTI has broken above the $62 level and is holding above the 200-day moving average near 61.92, though recent price action does suggest some consolidation. Support is seen near 63.12 and 61.98, with resistance around the $65 to $67 range. Next up, let's have a look at gold. Prices extended their parabolic rally, testing 5598 per ounce, marking 6 consecutive sessions of record highs. Safe haven demand remains strong amid ongoing economic and geopolitical uncertainty, while the market reaction to the Fed decision was quite muted. Gold has surged from around 4,600 to 5,600, gaining over 30%, with momentum extremely strong right now. While historical bull markets tend to end alongside rising real interest rates, no single signal has ever triggered a reversal. Technically, gold remains deeply overbought, with 14-day RSI near 89, but no reversal signs are evident. Upside focus remains around the 5,600 to 5,700 level, while downside support sits near the 5,250 to 5,100 level. Lastly, let's have a look at the Australian dollar. The Australian dollar continues to outperform, supported by strong domestic data, commodities, and US dollar weakness. December CPI rose 3.8% year on year, above expectations of 3.6%, with monthly CPI up 1%, reinforcing sticky inflation and increasing expectations of tighter RBA policy. Economic momentum remains solid, with manufacturing PMI at 52.4 and services PMI jumping to 56. Technically, the pair broke above the 70-cent level, supported by the 5-day moving average. While momentum is stretched, the trend remains quite strong, with upside reference near 78.80 and 71.57, and support around the 69-cent level. Well, that's all for today's morning market analysis. As always, manage your risk and happy trading.